Hi everyone, I welcome you all for another webinar session of Strategic Level Advanced Business Reporting subject. Today I will be discussing the answer for one of most recent past papers, that is July 2021, question number 1. So to begin with, I would like to share my screen. Let me share my screen. Yes, I hope you can see this screen. Yes, question number 1 of that question paper developed based on SLFRS 15 revenue standard. So I will be discussing the brief introduction about SLFRS 15 standard. After that, I would be taking you through the answer, suggested answer for that question. Yes, as I mentioned, this is the front page of the question paper, Strategic Level Advanced Business Reporting, July 2021 question paper. So today we can discuss the question number 1, part A. Part A developed based on SLFRS 15. So this is the question. So I will be reading this question, but before that I will give brief introduction on SLFRS 15. So let me open my whiteboard. Yes, I hope you can see this whiteboard. First, please take down this summary of SLFRS 15. SLFRS 15. SLFRS 15, the title of the standard is Revenue from Contracts with Customers. Revenue from contracts with customers. First, you should know this, as this particular standard is newly introduced standard. There were few standards that we were using before introducing this particular standard, SLFRS 15. So I would like to highlight the list of standards which were replaced by SLFRS 15. So let me list down the standards which were replaced. First one, LKAS 11 replaces LKAS 11, that is construction contracts. Construction contracts. Second one, LKAS 18, that is revenue. Third one, IFRIC 13. IFRIC 13, that is customer loyalty program. Customer loyalty program. Next one, IFRIC 15. That is agreements for the construction of real estate. Agreement for the construction of real estate. Next one, IFRIC 18. The title of this IFRIC 18 was Transfers of Assets from Customers. Transfer of assets from customers. Next one, SIC 31. Revenue, barter transactions, invoicing, advertising services. Revenue, barter transactions, invoicing, advertising services. That is SIC number 31. So those are the list of standards and interpretations which were replaced with SLFRS 15. With this, the number of replacements, you can understand the importance of SLFRS 15, because this is the solution for many previous standards, right? Therefore, this standard is very, very important, SLFRS 15. In SLFRS 15, there are few definitions are given. The first one I would like to highlight. I'm not going to highlight all the definitions given in the standard, but important definitions would be highlighted. First definition is contract, because that's in the heading as well. Therefore, I would like to highlight contract. What is contract? Contract is an agreement. Contract is an agreement between two or more parties. Between two or more parties. Two or more parties that creates enforceable rights and obligations. This is the definition of contract. Then I would like to highlight another two definitions, that's contract asset and contract liability. Contract asset and contract liability. Contract asset and contract liability. So let me explain that one through this example. Let's say there are two organizations, two entities. One is Aralia entity, Aralia PLC. Second entity, let's say Nimal PLC. Now Aralia PLC and Nimal PLC, there is an agreement. There is a contract. Now Aralia PLC should deliver goods or services. Now this revenue standard would be applicable to not the customer, the seller. Now in this case, let's assume Aralia entity is the seller. Please keep that in your mind. Then this Nimal PLC is the buyer. Those are the two parties involved with this contract. So in this case, Aralia entity transfer goods or services. In return, Nimal PLC should pay consideration. Right, now I'm going to explain contract asset. Now that contract asset and contract liability, both those definitions need to be discussed in the perspective of Aralia PLC. So here contract asset. What do you mean by contract asset? Now the asset means in future some economic resources will be received. In future some economic benefits will be received. Okay, so here Aralia entity will be receiving some consideration. So there is a right to receive consideration. To whom? Earlier PLC. So that could be identified as contract asset. That could be identified as contract asset. On the other hand, what is the contract liability? Contract liability in the sense earlier PLC has an obligation to deliver these goods or services to Nimal PLC. So that is the obligation, that is called contract liability. Contract liability. Let me read the definitions. If you need, you can write down. Contract asset, an entity's right to consideration in exchange for goods or services that the entity has transferred to a customer when that right is conditional or on something other than the passage of time. Then contract liability, an entity's obligation to transfer goods or services to a customer for which the entity has received consideration. So that is the definition of contract liability. So please keep them in your mind. So this understanding about this contract asset and contract liability is important. All these definitions are given in the standard, so you are allowed to bring the standard book into the examination hall. Therefore you can highlight them in the standard book itself. Right. Now there are a few other definitions as well, but because of the time limitation I'm not going to list down here, but I hope you can remember them, all the definitions of SLFRS 15. Now, as you are aware, this revenue with customers would be recognized by using five-step model. Five-step model. Right? Now I would like to emphasize the steps in this revenue recognition model. Let me write that five-step model. Right? Five-step model, the first step is What is the first step? Identify the contract. Identify the contract. Now, in order to identify the contract, both parties should approve the rights and obligations of the contract. Likewise, there are some conditions to be checked. So, first step is identify the contract. Then second step is identify the performance obligations. Step 2. Second step. Third, fourth and fifth. So let me write the second step. Identify the performance obligations. Third one, determine the transaction price. Next one, allocate the transaction price based on standalone selling prices. Last one, recognize the revenue. So those are the 5 steps in revenue recognition model. If you need, you can write down. Now I will give you one example. Let's say there is a motor vehicle selling entity. Let's assume Toyota. So there is a motor vehicle. The mark price, let's say 8 million. Mark price is 8 million. There is a customer. And willing to buy this motor vehicle. Then in the agreement, Toyota and this customer, let's say customer X and Toyota, there is an agreement. So in the agreement, Toyota should deliver the motor vehicle, and in the agreement there is a clause for the free service. There are 3 free services. And in addition to that, there is another item, that is, if this particular motor vehicle is used by the customer for 2 years without any major repairs, that customer will be sent to Japan as a tour. Let's say foreign tour to Japan. This is free of charge to the customer. This one has been mentioned in the agreement. Right, now you can see this, based on this agreement or contract, how many performance obligations are there? To Toyota? Because you are going to recognize revenue of Toyota, not the customer, right? Revenue of Toyota. Toyota company is the seller, right? You need to think in that perspective. Okay, now in this case, try to understand there are 3 performance obligations to Toyota company. Deliver the motor vehicle, 3 free services, and foreign tour. 3 performance obligations. Right, now all these 3 performance obligations, Toyota company decided this price. This is called transaction price. Now you should understand these performance obligations are not satisfied at one point. So it will take time. Motor vehicle immediately delivered. Then 3 services will be delivered during maybe within 1 year, maybe within 2 years. Likewise, there is a time gap. There is a time period. And for tour, let's say the Toyota company has given 2 years. After 2 years, the customer will be sent to Japan. Then, now you can understand the revenue should be recognized once performance obligations are satisfied. Therefore, even though Toyota company collected money from the customer, Toyota company cannot recognize entire 8 million as revenue. Cannot. Toyota company cannot recognize entire 8 million. Therefore, Toyota company should allocate this particular transaction price based on stand-alone selling prices. Right? So I'm explaining these 5 steps. Identify the contract, you can understand. Identifying the performance obligations, yes, now you can understand. Determine the transaction price, yes, you can understand. Now I'm explaining allocate the transaction price based on standalone selling prices. Now let me read the definition of standalone selling price. So that definition has been given. Standalone selling price means the price at which the entity would sell a promised goods or services separately to a customer. Now with that I would explain through this example. Now motor vehicle, there are 3 performance obligations. Those are the promised things in the agreement. If entity sell this motor vehicle only separately, so what is the price? If there is observable data, entity could get the observable one. If there is no such observable data, entity can estimate. Then similarly, all these performance obligations, standalone selling prices need to be calculated. Based on that standalone selling prices, this transaction price can be allocated to each and every performance obligations. Then in the last step, once these performance obligations are satisfied, revenue can be recognized. Once, I'm repeating the same sentence, once performance obligations are satisfied, revenue can be recognized. Then I would like to highlight these performance obligations can be satisfied over the period of time or else at a point of time. So I would like to highlight the conditions to be satisfied, the performance obligations satisfied over time. So could you please write somewhere here performance obligations satisfied over time. Next one, performance obligations satisfied at a point of time. Right, now I would emphasize the conditions for performance obligations satisfied over time. So please write down one by one. So I'm referring to the standard SLFRS 15. So that those conditions are given in section 35. You can read section 35. Another thing is you can highlight those 3 sections. Section 35, there are 3 points actually. So those 3 points can be highlighted. So let me write one by one because this is very important. Therefore, I would be writing it. First point, the customer simultaneously receives and consumes the benefits provided by the entities performances as the entity performs the customer simultaneously receives and consumes the benefits provided by the entity. Provided by the entity. Now, for an instance, entity means the seller. Entity means the seller. When entity performs the performance obligations, customer will receive the benefit. Customer will receive the benefit. That would be happen simultaneously. So that is the first condition. Second one, the entity's performance creates. The entity's performance creates or enhance an asset. Now, for an instance, there is a construction. Let's say construction firm and a customer. Now, there is a the construction business, construction company constructing a building for one of their clients, right? So when entity built, when entity day by day that particular building is constructed, then they incur money, the resources, right? Construction company incur resources. Then once they incur them, the value of the asset increase. So that's what. So entity's performance creates or enhance an asset. That the customer controls. As the asset is created or enhanced, right? Once entity perform the obligations, performance obligations are satisfied step by step, it creates an asset and it will be controlled by the customer. Please keep that point as well. Third one, the entity's performance does not create an asset with an alternative use to the entity. If customer withdraw from the agreement, there is no such alternative use of that particular asset to the entity. Maybe that particular construction, for an instance, that is more customized. If there is a cancellation of the agreement, entity need to incur big value to change the product, change the construction, right? There is a huge loss. Then that is impossible, right? That's what third point is saying. I'm repeating again, the entity's performance does not create an asset with an alternative use to the entity, and the entity has an enforceable right to payment for performance completed to date, right? to date. So please write down these 3 points. So that is section 35 in the standard book, SLFRS 15. Please refer those 3. Very important 3 points. Right? Now this section 35 emphasizes entity transfer control of goods or service over time, and therefore satisfy a performance obligation and recognize revenue over time if one of the following criteria is met. One of these 3 criteria, one of these 3 is satisfied, you can identify that one as performance obligation satisfied over time, not at a point of time. Right? That's why I emphasize these 3 points. One is enough. If one is satisfied, then that particular contract can be identified as performance obligation satisfied over time. Then the next one, performance obligation satisfied at a point of time. How it has been defined. If performance obligation is not satisfied over time, in accordance with section 35, entity satisfies the performance obligations at a point of time. At a point of time, because there are 2 options, no? Either this one or this one. If you are failing to satisfy at least one of these 3 conditions, then you need to recognize that performance obligations as this performance obligation satisfied at a point of time. Right? So please keep that in your mind. So this one mentioned in section 38. And other thing is this, let's say now I have taken one example of construction contract, construction company. Here customer or client, there is an agreement. Now with the agreement, construction company agrees to construct a building or whatever asset with a fixed price. There is a price, that is the transaction price. Then construction company can estimate the cost. So that's called input. When it comes to the measurement, so you can understand we should measure the completion of this particular construction, because when it comes to a construction, it will take sometimes more than one accounting period, maybe 3 years for an instance, year 0, year 1, year 2, year 3. So this, in order to complete this building, it will take 3 years. There are 3 accounting periods. Therefore, entity should know the stage of completion, right? Methods for measuring progress. Measuring progress. Right? In this measuring progress, the standard emphasizes 2 methods. What are those 2 methods? Output method and input method. So you can read about input method and the output method in section 41. So clear differences are given in this standard book. So you can go to section 41. In section 41, Section 41 clearly emphasized appropriate methods of measuring progress include output method and input methods. Output and input methods. For construction companies like this, which method is more appropriate? Input method or output method? You can guess. You can guess. Input method or output method. So trust me, for construction companies like this, is more the input method is more appropriate than output method. Input method, because entities incurring cost in order to complete the performance obligations, right? Okay, so you need to read the section 41 and paragraph B14 to B19. Paragraph B14 to B19. Paragraph B14 to B19. You need to read those additional readings. Let me turn to that particular page. You also can search that. B14. Yes, you can see in the B14 methods of measuring progress towards complete satisfaction of a performance obligation. So B14 clearly mentioned output method and input method. For output method, you need to read B15 to B17, output method. B15 to B17, input method. B18, B19. B18 to B19. I hope you would be writing those numbers, because you are allowed to bring the standard book. That's why I am giving these references, because this is strategic level. This is strategic level examination, so you need to refer the standard book. So here, as I mentioned, the clear differences are given for output method and the input method. Right. Now, with that brief explanation about revenue standard SLFRS 15, I would like to discuss practice question number 1 part A. Question number 1 part A. Okay, please read this one. I will give you a couple of minutes. Please read this one. Right. Now, yes, let me read the question. I hope you have started to read this particular information for question number 1 part A. Builders Private Limited, BPL, hereafter I would be saying BPL, BPL, yes, is a construction company, and it has entered into a contract with a customer to construct a manufacturing plant. Construct a manufacturing plant. Construct a manufacturing plant. Here Now you need to see whether there is a contract or not. First thing is identify the contract. Now you can see there is a contract between BPL and a customer. The contract period is 3 years. That's a long time, 3 years. And contract has following features. First bullet point, the plant has highly customized design specifications to include very unique features required by the customer, meaning there is no such alternative use. If there is a cancellation of the agreement, entity, meaning BPL, has to incur a lot of cost to in order to make that one into alternative use. But by looking at the first bullet point, that equipment or this particular plant is highly customized. There is no such alternative use. Second bullet point, the customer can cancel the contract at any time with the cancellation penalty. Any work in progress, excluding unused raw materials at the site. Excluding unused material. So at any time customer can cancel the contract, and any work in progress excluding unused raw materials at the site at the date of cancellation is an asset to the customer. Now you can think. Already I have highlighted these points under section 35 SLFRS 15. Now this is an asset for customer, work in progress excluding raw materials. Now I already highlighted 3 points. Now you can think, when you read these things, you can link with the points that I have highlighted already. Then third bullet point, the customer gets the physical possession of the manufacturing plant at the completion of the contract. That is the third point. Then fourth point, the customer is required to make payments as the construction progresses, and such payments are non-refundable. The customer is not required to pay for any unused raw materials available at the site. Unused raw materials. So unused raw materials are not assets to the customer. That belongs to the entity, BPL. Then additional information. We'll read. Now with those given information, you need to decide whether that particular contract or performance obligations are satisfied over the period of time, or else performance obligations are satisfied at a point of time. That's why those information is given, right? Okay, additional information. The total estimated revenue to BPL from this contract is 800 million. So that is the revenue of that particular contract. Total revenue 800 million. The total estimated cost is 650 million. Total revenue 800. In this point, estimated cost 650 million. Contract cost does not include commission of 10 million incurred by BPL to obtain the contract, which is not chargeable to the customer. Which is not chargeable to the customer. Now you can think whether that particular 10 million could be taken as a part of cost of this or not, cost of contract or not. So that 10 million cannot be chargeable to the customer, cannot be chargeable to the customer. That's purely an expense to this BPL, right? So I will explain now by looking at this. I hope you can understand now. Excluding this 10 million, the estimated cost for this particular project is 650 million. Second bullet point under additional information, at the end of the first year, the actual cost incurred 300 million. This includes 30 million wasted materials. Wasted, that is beyond the expectation. There is 30 million wasted material which was not expected. So that's abnormal. That's abnormal at the initial estimation of the cost. Even though 300 million incurred, this 30 million, are you going to take this 30 million as a cost of this construction contract? Now you can think this 30 million, whether you are going to take it or not. Remember, this is even not expected. This is abnormal cost. Maybe due to some issue, some inefficiencies, some mistake maybe, this additional 30 million incurred. So this 30 million should be recognized as an other expense in the profit and loss. In the other expense. So this should not be taken as a part of construction cost. So here 270 million is the real expense that you are going to take into consideration for this particular construction cost, right? Please keep that in your mind. The next one, at the end of the second year, now first year, yes, they have incurred 300, out of that 30 abnormal loss. So without having that abnormal wastage, the real expense for the project is 270 million. At the end of the second year, the cost estimated was revised to 700 million due to increased raw material cost. Now in the second year, the estimation has been changed, because that can be applied, because this is an estimation, cost estimation. So as per LKS 8, you can apply this one into prospective application. Prospectively, it can be applied. This is an estimation change. The cumulative actual cost incurred up to the end of the second year, 500 million. The cost incurred in the second year include 40 million worth unused raw materials at the site. From this 500, this is the accumulated figure. This includes this 300 as well. This includes this 300 as accumulated figure. This 40 million, that is unused raw materials. So that is not an asset for the customer. So you need to take that one into consideration when it comes to identifying the performance obligations. Satisfaction, right? Third one, the cost estimation at the end of the second year remains unchanged until the construction period is over. Meaning, this is the estimation, 700 is the estimation. Then next one, BPL concludes that the input method is more appropriate to measure the progress towards satisfying its performance obligation. Input method is more appropriate. So that has been given clearly. But as per the standard, there are two methods, input method and the output method. So already I have emphasized. So here in this one, the input method is more appropriate. So you need to apply that input method. Next one, let me show you the requirement. Advise the management of BPL on the accounting treatment on the recognition of revenue and cost from the above contract, together with the calculation of amounts required for each year from year 1 to year 3 as per SLFRS 15 revenue from contract with customers. You can earn 15 marks. You can earn 15 marks. Right, now I would be giving the answer for this question, 15 marks. So already I have discussed the background, so I hope you can write the answer, right? Okay, let me go to my whiteboard again. Right, first you should decide whether these performance obligations are satisfied over the period of time or at a point of time. Or I know already you have decided that based on the given points. Right, let me write the answer. Question number 1, part A. Based on the information given, there is how many performance obligations? Only one performance obligation, constructing the building plant, constructing manufacturing plant. That is the obligation to the entity. So please write down that information. Based on the information given, there is only one performance obligation. Only one performance obligation. In this contract. That is, construct the manufacturing plant. Construct the manufacturing plant. As per section 35 of SLFRS 15, a performance obligation is satisfied over time if one of the following criteria is met. If one of following criteria is met. Now I'm not going to write those 3 points again, because already I asked you to write them. Point 1, point 2 and point 3. Point 1, point 2 and point 3. So please repeat them in this place. Since I already asked you to write, I am not going to write again. I will read, however I will read. First bullet point is the customer simultaneously receives and consumes the benefits provided by the entity's performances as the entity performs. The second one, the entity's performance creates or enhances the asset that customer controls as the assets is created or enhanced. Third one, the entity's performance does not create an asset with an alternative use to the entity, and the entity has an enforceable right to payment for performance completed to the date, right? So by looking at these three, you can identify this performance obligation is satisfied over the period of time, not at a point of time, not at a point of time. So there is that is very clear, that is very clear, right? Please write down these three, then I would be explaining one by one. So here I would be giving the model answer for this past paper question number 1 part A. So you can see how this particular answer is developed. This is the expectation, this is the expectation, this is the way of writing it. That's why I'm even though the time is consumed, I'm writing in my whiteboard for you to understand, because this is the examiner's expectation from you. Right, now continue the answer. In this case, the plant has highly customized. The plant has highly customized. Highly customized. Highly customized with the unique features. Unique features required by the customer. Due to these unique features, there is a practical limitation. There is a practical limitation on BPL's ability to direct the asset for another use without incurring a significant economic loss. Without incurring a significant economic loss. Therefore, you can match that one into the third bullet point. See, the entity's performance does not create an asset with an alternative use to the entity. So this last bullet point is satisfied with that point, because one is enough. One of them, one of all these three is enough to satisfy a performance obligation to be identified over the period of time. Right? So with that point, so you need to explain like this. Then again continuing, further, in accordance with the paragraph, as per the paragraph, as per the paragraph 37, the entity has an enforceable right to payment for its performance completed. to date. The next one, remember, customer can cancel the contract. Customer can cancel the contract. However, the work in progress is asset for the customer. Asset for the customer. So that's also one of points mentioned in section 35, section paragraph 35. Let me write that one. Further, based on the contract terms, the customer can cancel the contract at any time with the cancellation penalty. With the cancellation penalty. Any work in progress. Any work in progress at the date of cancellation is asset of the customer. This indicates that the criteria B of the paragraph 35 is also satisfied. Therefore, BPL should recognize revenue from this contract over time. So that is the conclusion. That is the conclusion. So that's the first part. So this is the way that you should write your answer. You should earn 15 marks. Then you should write about the input and output method. But in the question indicates you should use input method. Okay. Write down when the revenue should be recognized over time. BPL should select either the input or output method. Input or output method to measure the progress towards satisfying the performance obligation. Satisfying the performance obligation. The question states BPL concludes that the input method is more appropriate. Then we should understand how this revenue is recognized based on input method. So first I will calculate the answer, then we'll write them in the proper format. First one, when I was reading the question, I already told you that additional expense that in order to obtain the contract, entity has paid around 10 million, if I'm not mistaken. Let me go to the question and see. Yes, 10 million. Here 10 million. So are you going to take it into consideration as a cost of the contract? No, you should not. Right? You should not take it into consideration. Therefore, the first year total expense 650. Now I'm going to talk about or calculate contract revenue and cost recognized at the end of the first year. Now revenue and the cost. First, let me discuss the cost. Now they incurred 300 million, but in this 300 million, 30 million abnormal loss, wastage, 30 million. So this 30 million you can charge into P&L as just an expense. So the considerable, or you are going to consider only 270 million as a cost of contract, cost of this particular contract. Then revenue, already you know the revenue, that is 800, right? 800. Revenue is 800. Now you need to see the progress. What is the satisfaction, performance satisfaction, or at the end of the first year. Now you cannot recognize entire 800, because this 800 is for 3 years. That is the total revenue. So you are going to recognize the revenue based on the input. Now input 270. That is the input. Out of what? Out of 650 total cost. Out of 650. That is the total expectation, total cost. Total cost is 650. Total cost is 650 million. Right? 10 million is not a part of construction cost. Is not a part of construction cost, so that should be charged into P&L as separate expense to this entity. Right, now based on the input method, so what is the percentage that they have completed based on input method? Based on the input method, they have completed 270 out of 650. Multiply by 100. If you are going to calculate a percentage, this is the percentage. 270 divided by 650 multiplied by 100. So 41%, 41.53%, 41.53% completed based on this input method. So you are allowed to recognize 800 into 41.53%. So what is the answer? 332.24. So same thing you can recognize like this as well. So let me write the answer to 332.24, or else 800 divided by 650 multiplied by 270. So all more or less similar answer will be getting 332.24 approximately. So this is the revenue. This is the revenue that entity should recognize. Let me write it. First year revenue 332.24, then contract cost 270. So please write down this answer. First year revenue to 332.24, contract cost 270. Even though they incurred 300, that 30 should be charged into P&L as other expense, but this 270 is the contract cost. Then second year, let me go to next page. Contract revenue and cost should be recognized at the end of the second year. At the end of the second year. Now the total estimation has been changed to 700. In this date, what is the total cost that they have incurred? Total cost incurred cumulatively 500. From this 500, wastage, unexpected wastage, that's include 30, should be deducted. Then unused material, raw material. Unused raw material, what is the figure? Unused raw material, let me check it. That's 40 worth unused raw material. 40 with this 500, right? 40 also need to be deducted. So what is the answer? So what is the total or accumulated expense or contract cost? Accumulated contract cost 430, right? So with this point, this is the incurred cost accumulatedly. Then total estimated cost, that is 700, right? That is 700. So in this second year, what would be the accumulated revenue to be recognized. Cumulative revenue equals 800, that is the total revenue, but you need to take the proportionate value. Total expense 700, but the second year end accumulatedly they have incurred 430. So what is the accumulated amount? 800 divided by 700 multiplied by 430. So you will be getting 491.42 million. So this is the total revenue to be recognized accumulated. Yeah. So this 491.42 consists revenue recognized in the first year. So you can remove that. Revenue recognized in the first year. So that need to be removed. No. What is the value? 300 let me erase this. 332.24. Now you can take the figure 491.42 minus 332.24, that is 159.18. So this is the revenue to be recognized in the second year. Revenue for the second year. 159.18. 159.18. Please write down this answer. And the cumulative cost. So next I would be writing the cumulative cost for the second year. Cumulative cost is 430 million. Cost recognized in the first year. That is 270. Already you are aware. Then you can recognize the cost for the second year. What is the answer? Cost for the second year? 430 minus 270, 160 million. So this is the cost for the second year. Please write down this one. Now I would be moving on to the contract revenue and cost that should be recognized at the end of the third year. Right, now cumulative contract revenue, because at the end of the third year this contract would be completed. All performance obligations will be satisfied. So cumulative contract revenue, let me write it. Cumulative contract revenue is 800. No, that has not been changed, But up to second year, entity has recognized, revenue recognized up to second year. Revenue recognized up to second year, 491.4 million. Then revenue for the third year. Revenue for the third year, what is the balance? Revenue for the third year, 800 minus 491.4, that is 308.6 million. So this is the revenue for the third year. Then I would like to emphasize the cumulative contract cost. Cumulative contract cost 700 million. Examiner has mentioned the same estimation need to be used for the third year as well. That means there is no such change in this estimation, 700. So that is the total expectation when it comes to the expense. So up to second year, entity has incurred 430 cost recognized. Up to second year, 430 million. So you can take the balance. So that is the value, that is the cost that incurred for the third year. Cost for the third year. Cost for the third year, 270 million. 270 million. 270 million. So please write down these answers. Now I explained how revenue and the cost for each and every year, first year, second year and the third year, recognized separately. Please write down the answer. I will give you a couple of minutes to write them. This is the first year one. This is the second year one. This is the third year revenue, and this is the cost. Right. Right, now I would like to give some explanation on this calculation. Please write down. Please write down. Cost to obtain a contract. Cost to obtain a contract that would have been incurred, regardless of whether the contract was obtained shall be recognized as an expense when incurred. Unless those costs are explicitly chargeable to the customer regardless of whether the contract is obtained. The commission of rupees 10 million incurred by BPL in obtaining the contract is not chargeable to the customer should be recognized as an expense. And next point, already we have taken them into consideration, but I should write in proper way. That's why I'm giving this answer as well. As per SLFRS 15, section 98B, an entity shall expense of cost of wasted material labor or other resources. Therefore, 30 million of wasted materials should be excluded from the actual cost. Yes. So these are the main points and the expected answer for this question. So with this answer, if you can write answer up to this level, you can get 15 marks. Remember, in this level, strategic level, even though you are providing the calculation, you need to explain the logic behind that. You need to cite what are the places that you are obtaining the references. So then you can get more marks. Because always you cite to the standard books, because this is open book examination. That's why you should read them in advance. If you look at standard book at the examination time, that particular examination date, then you would be wasting your time. You don't have enough time to read, and sometimes you don't know the place where those conditions are mentioned. That's why I'm asking you need to read in advance and highlight and be ready for your examination. So that's one of advices that I would like to extend or give to you then if you are properly preparing for your examination, so you would be getting good grades for this strategic level examinations. Right, with that, I would like to conclude this webinar session. I hope you enjoyed watching this video. So with that, I conclude. Thank you very much for watching this video.